We'll be discussing the mock test paper which was scheduled on 10th of March 2019, chapter 11 to 25, indirect tax laws, goods and services tax. Now the multiple choice questions. Question number 1 was dealing with the provisions relating to issuance of revised tax invoice. That is, Kedar Enterprises, Kanpur started trading in sports equipments from July 1, 2018, and turnover has crossed the limits of 20 lakhs on the October 3, 2018. And the firm has applied for registration on October 31st. Say within a period of 30 days, they have applied for registration. And the registration certificate was issued from November 5, 18. So during the period of October 1, 2000, October 3, 2018 to November 5, 2018, the company can issue, say, revised tax invoices. And the same will be issued within a period of 1 month from the grant of the registration certificate, since the registration certificate has been granted with effect from November 5/18 but has been effective from October 3/18. So the answer will be B. Revised invoices can be issued for supplies made between October 3, 2018 and November 5, 2018. For the revised invoices can be issued for the said period till what? November to December 5, 2018. Within a period of say 1 month, you can issue that revised invoices. Now, question number 2 was which of the following cannot be a reason for cancellation of registration? So, in case there's a change in constitution of business from partnership firm to proprietorship, then registration will stand cancelled. Business is discontinued, then also it will be cancelled. And a compulsion taxpayer has not furnished the return for 3 consecutive tax periods, there also registration will stand cancelled. However, if a registered person other than a compulsion taxpayer has not furnished his return for 3 consecutive, it must be 6 consecutive tax periods, that is basically 6 months returns. So here the answer will be D. Then what are the documents which are required to be sent to send goods from branch office to state, of one state to head office in the another state? So it is our own establishment of a distinct person. So there will be a reason for issuing what? A tax invoice as well as a e-way bill. Now, is e-way bill mandatory in case of transport of handicraft goods? We have an exemption in relation to those persons who are interstate supplies of handicraft goods engaged in interstate supply, provided they have to issue e-way bill mandatorily, irrespective whether the value of consignment exceeds rupees 50,000 or do not exceed rupees 50,000. So here e-way bill is mandatory even if the value of consignment does not exceed rupees 50,000. A registered person can claim refund of any unutilized input tax credit on zero rated supplies without payment of tax or credit accumulated on account of inverted duty structure. And basically the time limit will be before the expiry of 2 years from the relevant date at the end of the tax period, but before expiry of say 2 years from the relevant date. Now, if your accounts are under investigation, in that particular circumstance, the period of maintenance will be what? 72 months from the due date of furnishing the annual return pertaining to the year to which such accounts or records pertains, or 1 year after the disposal of such investigation, whichever period expires later, that is A or B, whichever is later. Now, service of notice, it can be served to any adult member of the family, may be available on the common portal, sending it to the courier, registered post with acknowledgement due, or affixing the copy to the notice board. So they are asking which one of the following is the correct method of serving notice. All of them are say correct. That is 1, 2, 3, 4 and 5. Answer will be D. Now Kidsy, a wholesaler of toys registered in Chandigarh, is a renowned local market for variety of toys with reasonable prices. Then they make a supply of 100 pieces of baby learning laptops and chat learning phones to Nancy General Store on 25th of September by issuing tax invoice. However, the said Toys were returned by the Nancy General Store on 30th September. So, in case of returns, what document the Kidsey will be required to issue? That is, they will be required to issue a credit note in this regard. A special audit under GST. The same will be conducted by a chartered accountant or cost accountant under section 66. Now, which of the following statements are, say, true with respect to accounts and records? Which of the following statements are true? That is, all accounts and records are required to be retained for, say, 6 years. This statement is true. Stock records is to be maintained by all registered dealers except dealers under composition scheme. This is also true. Composition scheme dealers are not required to maintain stock records, as well as what? They are not required to maintain the tax details relating to input tax rate, because they are not the same is not availed by the composition dealers. Then record is to be maintained by all dealers including composition. This is false. Monthly production records are to be maintained by all dealers except dealers who have taken option for composition. This is also false. Then monthly records are to be maintained by all dealers including composition dealer is true, and records are to be maintained at the principal place of business. So these are true. That is 1, 2, 5 and 6 are true. Which are the following statements correct? 1, 2, 5 and 6 are correct. So the answer will be A. Then Champak is located in the state of Himachal Pradesh. A job worker is engaged in providing job work services relating to silverware articles to his principal, Mr. Motilal, in the state of Rajasthan. And for the period from April 2018 to March 2019, the turnover is, say, 19 lakhs, and then they are earning rental income also 15,000 rupees per month. That will also be counted, but it's residential flat, though it's exempt, but the same will be counted for computation of aggregate turnover. And he has also made exempt supplies of handicrafts amounting rupees 50,000. Compute the aggregate turnover for Mr. Champak and also state whether he is liable for registration. So these supplies 19 lakhs plus 15,000 into, say, 9, 1,35,000 and 50,000. The same will be added and he will be required to obtain registration. Now, Jeet Ram is an agriculturalist located in state of Uttar Pradesh. He is a reseller of agricultural produce. Since he is a reseller of agricultural produce, therefore, to the extent of cultivation out of his land, the same is not included. But since he is a reseller here and the same is not out of his land, in that particular circumstance, he won't be getting the benefit of the agriculturalist. So his turnover during the period is rupees 25 lakhs, April to March 19 is 25 lakhs, and he has made interstate taxable supplies of 10 lakhs also of handicrafts goods. So his turnover will be, total turnover will be rupees 35 lakhs, and he will be liable for registration. Then Mr. Sunil Associates, the management consultancy firm located in Delhi, has certain foreign clients to whom the firm provides business support services. In this regard, to one of the foreign clients, certain services were rendered in January 18, and the invoices were also duly raised. The firm undertakes such export of services against LUT without payment of integrated tax. How it's likely that payment against the invoice would not be received till March 2019. That is, payment must be received within 1 year in convertible foreign exchange. Then in this case, they will be required to pay integrated tax. Yes, since the condition is not fulfilled for exemption in this regard, they will be required to pay integrated tax in this. And whether they can claim the refund, yes, they can claim the refund of the tax so allowed subsequently. So integrated tax payable by Sunlight Source and refund of tax will be allowed subsequently when they receive the amount in convertible foreign exchange. Then Mr. Gyan Publishing House, registered under Delhi's in Delhi, is engaged in printing and selling of books as well as trading of stationery items, and he has provided the following information: the taxable value of supplies indicated in the invoice is 35,000 rupees. Exempt supplies is 8,000 rupees, and goods are sent under job work delivery challan is 15,000 rupees. Now you are required to calculate the consignment value for the purpose of generating e-way-bills. So exempt supplies won't be included. In taxable supplies will be included along with what? The tax element thereon, that and tax element is 18%. So 35,000 का 18% add करने के बाद the value works out to be, along with adding 15,000, the value works out to be 56,300 rupees. Then question number 15 is where an agent supplies goods on behalf of principal. Such agent shall be say jointly and severally liable to pay GST payable on such goods. The principal shall be jointly and severally liable to pay GST payable on such goods. The liability will be of both agent and the principal. Now, time limit for issuance of order of best judgment is what? 5 years from the date specified for furnishing the annual return for financial year to which the tax not paid relates. It is due date of furnishing the annual return within a period of 5 years. The best judgment assessment will be completed. If a taxable person has done the following acts, then the inspection can be carried out. In case of suppression of any transactions of supply of goods or services, here also suppression of stocks of goods in hand, contravention of the provisions of GST law, and to evade tax. In all these cases, that is all of the above, the answer will be all of the above. Here the inspection can be carried out. In which of the cases the compounding of offense won't be allowed under section 138 of the CGST Act? It is person who has been allowed to compound once won't be allowed to compound again if the offenses are of the nature 132 1A2F. Then a person who has been allowed to compound once in relation to an offense other than one in respect of supplies of value up to rupees say 1 crore. Then a person who has been accused of committing an offense under this act, which is also an offense under any other law. So in all these cases, compounding would be permissible. And last one is all of the above. The answer will be all of the above. The answer will be D in this. What is the rate of tax and the nature of supply if same is not determinable on receipt of advance? If you don't receive any advance, you do not know the nature of tax, it will be regarded as an interstate supply, and the rate of tax will be what? 18%. The answer will be 18%. The rate of tax will be 18% in this regard. Answer will be C. Then which of the following statement is correct while issuing the tax invoice? Place of supply in case of interstate supply is not required to be mentioned. This is false. A power of attorney holder can sign tax invoice. This is also false. Quantity is not required to be mentioned in case of goods. This is false. And description of goods is not required in case of mixed supply. This is also false. So which of the following statement is correct? None of the above is correct. All statements are false. Then question number 21st is dealing with what? Mr. Raman Plastics as a manufacturer of plastic toys registered under GST in Shimla, Himachal Pradesh. It procures materials from Punjab. During the month of April 18, it purchased 35 lakhs material, paid IGST amounting 6,30,000. 30% of its production in state of Jammu and Kashmir, where 70% of its production is was supplied taxable at rate of 0.1% to the merchant manufacturer exporter during the month of April 18. The returns for the month of April 18 were duly filed. Now the last date up to which a taxpayer can claim the refund on account of inverted duty structure will be, that is 2 years from the end of the concerned financial year, that will be 31st of March 21. Question number 22nd is Mr. Motilal, a registered in Delhi, receives order from Mr. Chotilal, registered in Noida, Uttar Pradesh, for supply of goods 1 lakh and taxable at rate of 18%. Mr. Motilal agrees to supply the goods X factory, so the ownership passes where in the factory itself. Mr. Motilal supplied goods on 3rd November and issued a tax invoice 1,18,000, including IGST, in the name of Chotilal. Chotilal arranged his own vehicle for transportation of goods from Delhi to Noida How during transportation of goods, the vehicle of Mr. Chotilal was stopped and checked by the proper officer. The proper officer found that there was no e-way bill along with the tax invoice. The owner of the goods decided to pay penalty and got the goods released himself according to the provisions of section 129 of the CGST Act 2017, where the owner comes forward to pay tax and penalty. What is the amount to be paid for the release of the goods and who shall make the payment? So here the payment will be made by the owner of the goods and payment will be of the applicable tax and penalty equal to 100% of the tax payable. And Mr. Chotilal, who is the purchaser, will pay the tax amount as well as penalty amount equal to 100% of such tax. Now, which of the following statement is correct? An agent who is supplying goods on behalf of principal, where goods are issued in the name of principal, is required to get compulsorily registered under GST. So this statement is incorrect in the sense which of the following statements are incorrect. Then, persons who are required to deduct tax at source, whether or not separately registered, are compulsorily required to obtain registration. This is correct. And every person who is supplying OIDR services to a registered person, in that case the reverse charge mechanism is there and the registered person will be required to get themselves registered. And OIDR services are, the suppliers are not required to get themselves registered. This is also not correct. And person who supplies services other than supply specified under section 9(5) through such ECO who is required to collect tax are compulsorily required to get themselves registered under GST without any threshold. This is also not correct. So statement number 1, 3 and 4 are say incorrect statements. Now analyze the transactions mentioned below. Mr. Abhay provides architect services to Institute of Rural Development, a government agency, that is 2,80,000 rupees, inclusive of 30,000 GST under contract in October 18. Mr. Abhay is registered under GST, being a registered supplier. Institute of Rural Development deducted TDS of the supplier. Is it justified? Only when the contract value exceeds rupees 2,50,000, then only there will be a TDS requirement. So in this case, since the contract value do not exceed rupees 2,50,000, there will be no requirement of tax deduction at source. So this statement is not in compliance with the provisions of section 51. Now, Manmohak Apparels is registered under GST in Madhya Pradesh, sells leather handbags across India through e-commerce operator Ping Pong, who is also registered in MP, and GST authority as TCS collector and collected TCS at rate of 1% on supplies made through it. Mr. Manmohak Apparels made sales of 3,45,000 and received sales return of 67,700. So from 3,45,000, 67,700 will be reduced. Then value of taxable supplies exclusive of GST will be worked out, on which tax will be collected at source, and this works out to be 2350 rupees. So this statement is correct in compliance with the provisions of section 52. There is no threshold limits in case of tax collection at source. So which of the transactions are in compliance with 51 and 52? Only number 2 is in compliance with 52. Now, which of the following statement is true with regard to casual taxable person? Casual taxable persons are mandatorily required to obtain registration, and X is required to get registration if the aggregate turnover in the financial year exceeds rupees 20 lakhs. X can opt for voluntary registration, and Mr. X has to compulsorily get registered irrespective of his threshold. So this statement is correct. Mr. P Limited, a registered of having registered office in Companies Act in state of Maharashtra, from place where it ordinarily carries on the business of taxable goods. It is also a warehouse in the state of Telangana for storing the said goods. What will be the place of business of P Limited under GST law? It will be both Maharashtra and Telangana. Answer will be C. And which of the following statements are correct? Which of the following statements are correct? That is what? Revocation of cancellation of registration under CGST Act and SGST Act shall be deemed to be what? Revocation of cancellation under SGST and CGST Act. So this statement is correct basically. Others are not correct. Then within how many days one has to make an application for revocation of cancellation of registration? That is within 30 days from the date of cancellation order. What is the validity period of registration? 38. The same is valid until it is cancelled. Now, Topinath is an unregistered person who has an aggregate turnover of 16 lakhs, sells mobile phones to Mr. Gopinath, a person registered under GST in Uttar Pradesh. So basically, he is making an interstate supplies. Whether any amount of penalty is leviable on Topinath for such supply? If yes, what is the maximum amount of penalty that can be levied? So here, since he is an interstate supply, making supplies interstate, he is compulsorily required to get himself registered and will be liable to pay tax. But since he has been not paying the tax, is unregistered, basically is not registered in that particular circumstance, he will be liable to penalty on account of failure to obtain registration, which will be equal to 100% of the tax so evaded, or 10,000, whichever say higher, will be liable to a penalty of this amount. Question number second A, that is of 6 marks. It was dealing with the provisions relating to registration. That is, Rishabh Enterprises, a sole proprietorship firm, started an air-conditioned restaurant in Virar, Maharashtra in the month of February, when the customers are served cooked food as well as cold drinks and non-alcoholic beverages. In March, firm opened a liquor shop in Raipur, Uttarakhand, for trading alcoholic liquor for human consumption. Determine whether the Rishabh Enterprise is liable to be registered. First of all, in case Uttarakhand, the turnover limit is rupees 10 lakhs. But when the person makes taxable supplies of goods or services from Uttarakhand, then only the registration provisions will be seen. Otherwise, the same won't be seen. The limit of 10 lakhs will be seen only when, if any taxable supplies have been effected from state of Uttarakhand. So that must be kept in mind. So in the month of the February, देखिए, the turnover is, say, supply of serving of cooked food and cooked cold drinks and non-alcoholic beverages, that is 5,50,000 rupees. Alcoholic liquor for human consumption, that is in Uttarakhand, it was not in February. Then interest on received on bank deposits, that is exempt supplies, that will also be included in aggregate turnover, and export will also be included in aggregate turnover. Since the aggregate turnover is rupees 8 lakhs only in Maharashtra, it will not be required to get itself registered. Then the limit won't be reduced to 10 lakhs because in this Uttarakhand, they are only making what supplies of alcoholic liquor for human consumption. So the limit won't be reduced to 10 lakhs because it is not leviable to GST. It's not a taxable supply here. But the same will be counted for computation of aggregate turnover, since exempt supplies includes what? Non-taxable supplies also. And in aggregate turnover, all these turnover is to be seen, including what? The all taxable supplies, all exempt supplies, goods and services, goods exports of goods and services, and all interstate supplies of a person having same PAN. And in exempt supply, as you are already aware, key those supplies which are not taxable will also be covered under the ambit of, say, exempt supplies as per the provisions of section 247. So this will be included. Now in the month of March, it is 6,50,000. So aggregately, it is 12 lakh rupees. And this 5 lakh will also be included because it is non-taxable. Exempt supplies, this will 2 lakhs will be there, and this 2 lakhs means 3,50,000 will be there. Since the aggregate turnover has now exceeded what? Rupees 20 lakhs, since in the state of Maharashtra, therefore it will be required to obtain registration. So Rishabh Enterprises was not liable to be registered in the month of February, since the aggregate turnover did not exceed rupees 20 lakhs in that month. However, the aggregate turnover has exceeded 20 lakh rupees in the month of March, it should apply for registration within 30 days when it becomes liable for registration. This was the conclusive answer in respect of the same. Now, question number 2B was dealing with the provisions relating to tax reduction at source. Now, Manihar Enterprises is registered in Delhi. So supplier is registered in Delhi. It is engaged in supply of various goods and services exclusively to whom? Government departments. And the persons are required notified under Section 51 of the CGST. So the suppliers are effecting supplies to government department and other persons who are notified under Section 51 to deduct tax at source. Now it has provided the following information relating to supplies made, their contract values and the payment due against each of them in October 18. So first of all, it is what? Supply of car rentals to municipal corporation. 2,95,000 is the total contract value. So here, whether they are required to deduct tax at source, because rate of tax is 18%. So you must remember, if the contract value exceeds rupees 2,50,000, then only there will be requirement of what? Tax reduction at source. So supply of car rentals to municipal corporation of Delhi, since though the total contract value is 2,95,000, but the total contract value excluding GST is 2,50,000. That is value of the contract value do not exceed what? 2,50,000. Here, no 2 days will be required. So the municipal corporation of Delhi won't be required to deduct tax at source. And second was supply of taxable goods to Delhi office of National Housing Bank, a society which has been established by Government of India under Societies Registration Act. The total contract value is 6,49,000. So basically, the total contract value excluding taxes is 5,50,000, which exceeds rupees 2,50,000. Therefore, there will be liability to deduct kya? Tax at source. Since the supplier is in Delhi, as well as the recipient who will be making the payment is also in Delhi, they will be deducting kya? Tax at source of the payments who made 50,000 CGST element and SGST element of 11% respectively. So here the amount of TDS works out to be 1,000 rupees. Then interior decorator of Andhra Bhavan located in Delhi. Interior decoration of Andhra Bhavan located in Delhi. Service contract is entered with the government of Andhra Pradesh. Now as we remember that in case the location of supplier and place of supply are in a particular state, but location of the recipient is in what? A different state, then there will be no TDS liability. So no tax is to be deducted at source if location of supplier and place of supplier is in a state or a union territory which is different from what the state or union territory of the registration of the recipient. Since recipient will be deducting tax at source, say they are located in Andhra, in that particular circumstance they will be deducting, say, CGST element and SGST element, and that will be of Andhra, but supplier is in Delhi, so supplier won't be entitled to take what? The credit of the SGST so deposited in the Andhra, and therefore there is no liability to deduct tax at source. Then the fourth one is supply of printed books and printed postcards to West Delhi Post Office out of total contract value of 9,72,000. Here, the total contract value of 9,72,000. Contract value for supply of books exempt from GST is 7 lakhs and value of printed postcards is 2,72,000. So in this case, exempt supplies will be excluded. Then the value of taxable supplies works out to be how much? 2,72,000 into 100 upon 118. So that is 230,509. So since the contract value of taxable supplies do not exceed rupees 2,50,000, there will be no liability to deduct tax at source. Then question number 3A was with reference to provisions relating to electronic weigh bill. So Sindhi Toys manufacturers registered in Punjab sold his electronic toys to a retailer in Gujarat at a sum of value 48,000, excluding GST at leviable at rate of 18%. So we have to see the consignment value including taxes. So if the consignment value exceeds rupees 50,000, then you are required to issue, say, e-way bill. E-way bill provisions will be mandatory, and consignment value includes what? CGST, SGST, UTGST, and GST cess. So in this case, on 48,000 rupees, 18% is GST. So the consignment value works out to be for 56,640. Therefore, in this particular circumstance, question number one was whether e-way bill is required to be generated. So yes, e-way bill will be required to be generated. Then, if yes, who is required to generate the e-way bill? The e-way bill contains basically two parts. Part A, information which is relating to the goods, that is will be filled up by the registered person who is causing the movement of the goods, that is the consignment value exceeding 50,000 rupees, that is to be furnished. And part B is the transporter's detail, which will be furnished by the transporter, and on fulfilling the part A and part B information. When part B information is filled up, the e-way bill will be generated. So fundamentally, either the consigner, or if the consignee they have not generated the e-way bill, then the transporter's responsibility will be there to generate what? E-way bill. So all these theoretical aspects you have to write in the same. And what will be the consequences of issuance of non-issuance of e-way bill? In that particular circumstance, as we already discussed above, penalty will be levied of 10,000 rupees, or tax which is sought to be evaded, whichever is say greater, as per the provisions of section 122. Besides this, 129 provides that wherever any person transport any goods or stores any goods while they are in transit, in contravention of the provisions of the Act or the rules made thereunder, then all such goods and conveyance which are used as means of transport are liable for detention and seizure. Then question number 3B is in relation to records which are not to be maintained by composition suppliers. The commodity wise stock account is not required to be maintained by the composition supplier. Besides this, account containing the details of taxes, including ITC, is not to be maintained by composition suppliers, and composition suppliers are not entitled to avail what? The input tax credit. The next was in relation to what? Inverted duty structure. So product A, the output rate is 5% and input rate is 18%. And then product B is notified product on which no refund of ITC can be available on account of inverted duty structure. The product B will be excluded for the purpose of calculating the refund, and product C is not covered under inverted duty structure. So you will be entitled to take the refund of what? Product A, and the formula will be turnover of inverted rated supply of goods or services upon adjusted total turnover into net ITC minus whatever is tax payable on inverted rated supply of goods or services. So net ITC is what? The ITC which has been availed on inputs during the relevant period other than input tax credit which is availed and for which refund has been claimed here. So here the net ITC which has been availed is 54,000, 54,000 and 10,000. That is the net ITC. And whatever the turnover of what? The inverted rated supply, that is 5 lakh rupees. Upon total turnover is what? 5 lakh plus 3 lakh 50,000 plus 1 lakh, that is 9 lakh 50,000 rupees. So the tax which has been payable on inverted rated supply is 5 lakh into 5%, is 25,000 rupees. So the maximum refund which is admissible will be how much? That is, as per this formula, there is 1 lakh 18,000 into 5 lakh divided by 9 lakh 50,000 minus 25,000, that is 37,105 will be the maximum refund which is admissible by this formula. Now question number 4A, there are requiring a theoretical question, that is when an access to business premises allowed and list of records which are to be produced. So during the course of any inquiry under the Act, the officer empowered have access to the business premises. Besides this, the concerned persons who are being given access, that is officers or say chartered accountants or cost accountants who have been appointed for conducting special audits, or the officers deputed by the commissioners, they will have access or they can inspect the books of accounts, documents, computer programs, computer software, and other things as may be required. And they have access to the records which are prepared and maintained by a registered person and declared by the proper officer, trial balance or its equivalent, statement of annual financial accounts, cost audit reports, income tax audit reports, and other relevant records. The next question was in relation to advance ruling. The first aspect key whether registered only a registered person can seek an advance ruling. The answer is no. A person who has been registered or is, say, even if he is not registered, if he wants to undertake any activity, he can seek a advance ruling. That is, advance ruling can be sought by a registered person or person who is desirous of obtaining registration. So registration is not a mandatory condition. Can classification of goods matters can be raised? Yes, they can be raised. Relating to place of supply matters, actually that's the same as not being listed in the matters in respect of which advance ruling can be sought. Therefore, it has not been specifically listed. However, whether a supply is a taxable supply or not depends upon place of supply. So, contrary view is also there. Since whether a supply is a taxable supply or not, it depends upon where the place of supply is there. Therefore, in that particular circumstance, place of supply issue can also be raised. So, here, whether a person is liable to pay tax on goods or services in relation to exports, if the place of supply is outside the taxable territory, or say if in case of imports also, if the place of supply is outside the taxable territory, then the taxation won't be there. In that particular circumstance, the alternative view is there. For that determination, for place of supply matters also, advance ruling can be sought. Then Ranjan is apprehensive that advance ruling permitted to be sought he has to seek every year. Now, advance ruling once given, the same will remain valid unless there is any change in law or facts of the case. Then whether it is appealable, yes, further appeal can lie to appellate authority for advance ruling. And his friend wants to adopt this ruling. No, for that purpose, separate ruling is to be obtained because advance ruling will be binding on that particular applicant only in respect of the matters and his jurisdictional officers. Then question was relating to furnishing of annual return. It is every registered person other than the ISD, tax deductors, tax collectors, casual taxable persons and RTP are required to furnish annual return in GSTR 9 form on or before 31st December. Composition supplier is to required to furnish in GSTR 9A. Besides this, a reconciliation statement is also required to be furnished along with a copy of audited accounts of those registered taxpayers whose turnover exceeds rupees what? 2 crores in GSTR 9C form. Then question number 5A was a recourse which an officer can take if the concerned person has not furnished the replies in relation to the discrepancies which have been seen in the return and notice has been issued to the concerned person who is conducting any inquiry under section 61. Then what the recourse can the proper officer can take? He can proceed to conduct audit under 65. He can direct a special audit under 66. He can go for inspection, search and seizure under 67, or he can go for issuance of the show cause notice under section 73 and 74 for raising tax demands. Now, Rajul has been issued a CN on 31/12/22 and for the period 17/18. So, the financial year is what basically 18/19 is the financial year. So, the due date of furnishing the return will be annual return will be 31st of December 2019 and 3 years prior to 3 years 3 months, that works out to be how much? That is 2 years and 9 months from the due date of furnishing the annual return. A show cause notice involving normal period of limitation can be issued in that particular circumstance. The notice is to be issued at least by 39/22. Since in this case notice has been issued by 31/12/22, the notice will be barred by limitation. So you have to give the reasons for non-sustainability of the notice, time limit regarding issuance of notice, notice is barred by limitation, and notice will be invalid and proceedings shall stand say concluded. Then question number 5C was relating to directors of private company. So liability of directors of private company. As per the provisions of section 89, every person who is the director of a private company, if tax dues is for that period, he will be held liable unless he proves that the tax dues could not be recovered. Not that is not on account of what his gross neglect, misfeasance, or breach of duty on his part. So in that particular circumstance, the amount cannot be recovered from him. Otherwise, the directors will be there, who they will be jointly and severally liable for the tax dues during that period when they were director, whether the same has been determined during that period or subsequently also, and it will be recovered from them. But in case if a private company is converted into public company, then liability of those directors gets dispensed with. However, the exception won't be applicable in respect of personal penalty which has been imposed on such directors. Then the parties registered under CGST Act has made a breach of payment of tax amounting rupees 6100. Assessing authority has imposed a penalty as applicable for law to the breach invoking provisions of section 126. The party argues that is a minor breach. So basically, when it will be considered as a minor breach, when the amount of tax involved is less than rupees 5,000. So the triparty's ye argument that is a minor breach is not sustainable. Then Tripathi voluntarily writes accepting a major procedural lapse from his side and request officer to condone the lapse and loss caused to revenue was not significant. Also, lapse on the part of Tripathi has no specific penalty has been there. He is very confident that no penalty can be levied in the specific provision. So, discuss what action can be taken by assessing authority under law. So, first of all, the argument that relating to minor breaches that won't be sustainable since the amount of tax involved is less than rupees. The amount of tax involved is not less than rupees, say 5,000. Then any omission or mistake in documentation which is easily rectifiable and made without fraudulent intention or gross neglect is not liable for penalty as per the in terms of section 126(1) of the Act. This penalty imposable in present case is since the omission in the documentation is not easily rectifiable and has occurred due to what? Gross negligence. So he cannot take the benefit of section 126 subsection 1. And in case if there is a voluntary disclosure on his part, then the same can be a mitigating factor for imposition of penalty. Since the party has voluntarily disclosed a breach of procedural requirement to proper officer, the proper officer may consider as a mitigating factor when the quantifying the penalty. Therefore, quantum of penalty will depend upon the facts and circumstances of the case. And then say that there is no specific penalty, then a general penalty is there as per the provisions of section 125. When there is no specific penalty, then a general penalty can be imposed. In this case, general penalty can be imposed up to rupees 25,000 in case where no specific penalty has been provided. Question number 6 has been left. So what is reference with reference to the provisions of section 120 of the CGST Act lists the cases in which appeal is not to be filed. So basically, when the appeal cannot be filed by the departmental officers, that is the board, they may fix monetary limits. This is 268 is of Income Tax Act. So here also monetary limits can be fixed for regulating of what? The filing of the appeals. And in case if any monetary limit has been fixed, in that particular circumstance, if the amount involved does not exceed the amount of the monetary limit so fixed, in such case, department officers will not file an appeal. But non-filing of appeal or application by the CGST officer on account of such monetary limits fixed by the board shall not preclude such officer from filing the appeal or say application in any other case where the amount involved is what? More than this. And no person who is a party in the application or appeals can subsequently raise the objection since the department has not gone and filed an appeal in the first matter where monetary amount was less. They have been, say, agreed with the decision of the lower authority and now they are taking a contrary view. So this issue, this ground cannot be raised further. So no person who is a party in application or appeal can contend the CGST officer has acquiesced in the decision on any disputed case by not filing an appeal or application. And the appellate tribunal will also consider the circumstances. The court will also consider the circumstances why the appeal has not been filed earlier. If it is on account of monetary limits, then they will accept in the other issues, other cases. Otherwise, kya hai? In case it is on other factors, then in that particular circumstance, they will look whether to accept the appeal or not. Then question number 6C was Richardson has self-assessed tax liability of 80,000. He fails to pay it within 30 days from the due date of payment of tax. Determine the amount of interest and penalty payable. Explain the provisions of the law. So, in case if a person fails to pay the same by the due date, then he will be liable to pay interest at rate of say 18% per annum. And here the date of collection is 18th of December 18. So the due date will be 20th of January 19 and he has paid it on 26th of February. So the number of days will be 37 days and interest will be calculated amounting to this. Beside this, in case if self-assessed tax is not paid within 30 days, section 7311 provides that in case of such person shall be liable to penalty of what 10% of the tax or rupees 10,000, which is greater. So we won't be getting the benefit of reduction here also. If you therefore here penalty will be imposed of 10,000 rupees since the self-assessed tax is not paid within how many days? 30 days. Then question number 7A was relating to Radhaswamy owns and supplies certain goods costing rupees 30 lakh in a conveyance hired from Money Current Transport. Market value of the goods is 40 lakh rupees and tax chargeable thereon is rupees 4 lakh 80,000. Now goods are liable for confiscation and an option of redemption fine has been given. In respect of goods, the amount of redemption fine cannot exceed what the market price less the tax payable thereon. And in case of conveyance, it will be the amount equal to the tax leviable thereon. So here maximum amount of redemption fine that can be imposed in respect of goods will be 35 lakh 20,000 rupees and in respect of conveyance it will be what 4 lakh 80,000 rupees. Now what orders can National Anti-Profiteering Authority can pass? They can order for reduction in prices, return to the recipient an amount equal to the amount not passed by way of commensurate reduction in prices along with 18% interest, deposit the amount in consumer welfare fund, that is 50% of the amount determined to be claimed, determined under above clause is to be under consumer welfare fund under section 57 of the CGST law and remaining 50% under GST law of the concerned state. Imposition of penalty and cancellation of registration. So this was discussion relating to the mock test paper which was scheduled on 10th of March 2019.